And News 3 is taking action for your money. You know, April 15th isn't just tax day, it's also the deadline to be able to put money into your IRA for 2020.
Yeah, News 3 anchor Todd Carrillo talked with our financial expert, Carl Carlson, to find out what you need to know.
The IRS actually allows you up until April 15th to put money into your IRA for the previous year. The year of 2020 is what we're currently talking about. And that's because sometimes you really don't know what your taxes are going to look like until you get close to April 15th to filing them. So that's why they give that permission. And then you have to start trying to figure out, do I put money into an IRA or not? And if you're under 50, you can put up to $6,000 in the IRA. And if you're over 50, you get to add another $1,000 and put $7,000 in. So that's the IRA maximums. And of course, you can put any amount up to that maximum in there.
Now, is there any link between what you might be funding through a 401k, for instance, at your workplace and what you can contribute to an IRA?
So many people do get confused there, because if you think, well, the maximum I can put in an IRA is 7,000, but I already put 10,000 in my work, so I probably can't do it. But those two are very separate. So you have your work retirement plan, which for some is a 401k. If you work for the federal government, that's a TSP, or a 403B if it's a nonprofit. They all have different names, but they're basically your work retirement plan. And that's totally different than your individual retirement plan. That's the IRA. So you can fund them both to the max. And I would definitely look at doing that. And then it depends on, well, okay, if I put money in, is there an income limitation on the individual retirement account? And that's kind of our next thing we have to deal with. So for the individual, if you make $75,000 in your modified adjusted gross income, and let me just kind of simplify that. Let's say you make $75,000 salary, but you put $10,000 into your work retirement plan, then you really are only showing up as having made $65,000 for purposes of these IRAs. So but if that number is over 75,000, you cannot deduct the money you put into the IRA. If you're filing joint and married, then that number can be 124,000. But if you make more than that, then you cannot deduct the money. You can still put the money in, you just can't deduct it in the IRA.